Welcome back, investors. So in this next video, I actually received a question from one of my students related to value investing, and she was asking me, in fact, what is going on with Chinese banks. There are rumors and news that actually there is a bank crisis going on in China. So actually what is interesting is that I discussed about China, and more specifically the Evergrande situation in, I think it was an October 2021 video on this YouTube channel, and the story actually comes back again in the news. So I'll try to put as always facts on the table and try to give you some keys how to read what is going on with Chinese banks, and just to understand in general how the bank system and the bank industry is structured in China. So let's go into it. So the first thing is, so what my student actually caught, which I saw as well, is probably this type of news where you see that, and I'm not very good at, of course, I don't speak Chinese, but even the spelling will be very bad. So sorry for my Chinese friends here. But there were rumors that, and probably facts, that one company called Zhongxi Enterprise Group had actually filed for bankruptcy, and another bank, Jiangxi Bank of China, had gone under as well. So that's, I mean, you see here on the dates, we are speaking here around the 1st and 2nd week of July 2024. So it was in the news, and in the meantime, you're going to see this. I will, of course, conclude the video at a certain point in time, is that for the time being, it has been silent again. At the same time, I mean, for those who follow the Chinese stock market, you can see here on this graph that the Chinese stock market, specifically if you look at the Hang Seng index, that it's for the time being pretty low. So a lot of people feel, I would say, kind of depressed about the Chinese economy. And again, I'll try to put some facts here on the table, what we know about the Chinese economy, what we know about the Chinese banking industry. So let's start first things first, just to give you, I mean, in case you know the economy part, of course, this will be a repetition. If not, I'll try to give you some, let's say, updates on where the Chinese economy stands currently, then giving you some keys how to read the Chinese banking system, and then just provide an update on the latest news. So in terms of economy, sorry, before I forgot that. So in terms of sources, so and again, you know me, I don't want to go into political conversations here. So I really try to put the facts on the table as they are available. So I use the information that was available from the Chinese Central Bank, so the People's Bank of China. I also use the Statistical Office of China, which is called the National Bureau of Statistics of China, and also for some statistics I use the State Administration of Foreign Exchange, and I will put always in the slides the sources actually and the link to the information that I was able to capture. So in terms of economy, so here I'm using a graph from Visual Capitalist that you may know. I have a subscription with Visual Capitalist, so I get, I don't know, every day, every couple of days, an email with nice infographics about, let's say, financial or economical elements from Visual Capitalist. So I recommend you, I mean, if you don't know Visual Capitalist, it's very interesting. They provide sometimes very interesting statistics in a very nice visual way. So here, what you can see is, so they looked at the 2023 global GDP, and I think what is interesting to know is what is the latest GDP from China compared to the rest of the world, and compared also with the US. So you see that the US remains number one with $26.9 trillion of GDP, while China is very clearly the second one with around 19.4 trillion. So that's a rough cut, let's say 2/3 of the USA GDP, in fact. And we will come back to this 19.4 trillion figure later on, where we will compare actually this figure with the size of the banking system. You see that Japan is still bigger than India. India is 3.7 trillion. You see that Great Britain is 3.2, Germany 4.31, France 2.9, Russia 2.1, Brazil 2.1, etc. So you see that, of course, USA and China, they dominate currently from an economical perspective the world, and then really by much smaller order of magnitude you have then Japan and India, following up with some European countries which include Germany, Great Britain and France, followed by Italy. So in terms of one thing that is also interesting, if you want to have some kind of global, let's say, economic metrics around China, is the yuan versus US dollar exchange rate. So you can see also here on this graph from TradingView that actually the foreign exchange conversion ratio is pretty low for the time being. So it's 0.13 Chinese yuan for one US dollar, and you see actually that it went down. And if you compare it like 10 years ago, so it's, I mean, of course, when COVID hit, it went down, then it went up again, and now it's again pretty low, I must say. So this is kind of showing also, it follows kind of the curve that we have seen for the Hang Seng Index as well. In terms of economic growth, because a lot of people and a lot of companies actually, and again, you know that I'm not a macroeconomic investor, I'm a value investor, so I like to invest into companies where I try to think as a business owner, as a shareholder of those companies, even though I have a very, very small minority share in those companies. But from a economical perspective, what you can see actually is you see that the growth, so here we're looking at the GDP of China, and you see actually that the GDP has been growing. Of course, 2020 there was COVID, so the years 2019, 2020 there was COVID, so it was a little bit flat. But since 2021, it has been growing again, and 2022 as well. We don't have the 2023 figures for the time being. At least I could not find it. So you'll see that the GDP has rough cut doubled within the last 10 years. And by the way, remember that when I speak about value investing, when I say what is a, let's say, a fair return that you should expect, I'm mentioning 7% as a good target, as a good average target. And you see here that the compound annual growth rate of the Chinese GDP is 7.39%. So basically, you see that 10 years ago, the GDP was rough cut at 8 trillion US dollars equivalent at constant US dollars, and now it's rough cut at 16. So it has been multiplied by 2. So this is the compounding effect of the 7% that is compounding every year. So this is rough cut the compound annual growth rate of the Chinese GDP. Then when you look at the segments or the let's say the verticals or the industries that are contributing to the GDP, the biggest one, of course, is it's put here as industry. Let's call it manufacturing as well. So that's like a third of the GDP is linked actually to the industry, to manufacturing. You see that wholesale and retail trade is 10%. You see that financial intimidation, we're going to look into the financial sector, of course, is 8%, construction 7%, real estate 6%, and other, so you have agriculture, etc. You have other, of course, verticals in those 36%. But the biggest one is clearly industry, followed by wholesale and retail trades. Other key metrics, just, to give you an update. So the population, and I looked at the National Statistics Bureau of China. So they are at 1.4 trillion in terms of population, and there is no growth for the time being. So it's actually flat since, I think it's like 4 or 5 years. It's actually decreasing a little bit by a couple of million every year. And the unemployment rate has grown a little bit, is at 5.5%, but it's not structural. Again, I'm not a macroeconomic specialist, but basically, I think that macroeconomists agree that when the unemployment rate is at like 3 to 4% rough cut, you don't have unemployment issues. And of course, I feel sorry for the people who are in that percentage, because you have people who don't have a job, and it's the case also here for the 5.5%. But overall, the unemployment rate is currently in China, according to the latest statistics from the National Bureau of Statistics of China, at 5.5%. Has been increasing a little bit. I think the last year was at 5.2%. Now, I'm showing you here a picture of a suburb of, I don't remember which city this is, and this is actually, and I will bring this back to the conversation of real estate. And actually, when you go back to the Evergrande video that I shot in October 2021, it was about the real estate bubble that happened in China at that time, which actually had as consequence that Evergrande, one of the largest real estate, let's say, promoter sellers in China, has actually been delisted from the Hong Kong Stock Exchange for a very long period of time. In fact, one of the things that is important to understand as well, to understand why, again, coming back to 2020, 2021, when this real estate bubble conversation was there, that some Chinese banks or that even companies like Evergrande would only be able to pay the debt to domestic debt holders, but foreign debt holders would be delayed in the reimbursement of the debt, for example. One of the underlying reasons that you have to understand when you look at how households in China and comparing this with other countries, what are the type of assets that households have in China versus other countries? And this is a very interesting graph that I want to show you here. First thing is, I mean, you know that I'm an equity investor and mostly a large cap or mega cap value investor. So when I add, you see this on the left hand side, the bullet point 1 and 2, when you look at stocks and investment funds and you compare it with the US, which is on the very left hand side, so you see the US actually being here, and you see China on the right side, you see actually that the proportion of household, let's say, money that is being allocated to investment funds and stock assets, it's definitely much higher. It's like 3 times the percentage that you have in China, for example. Why is this? Because China and Chinese people, and understood this is cultural, they have always loved to invest into buildings. And this is what basically you have on the next slide here. You see that the amount of money that is being held by households or allocated by households into building assets, you see that it's more than twice the amount that you have in the US. So if in the US it's rough cut, let's say 25%, you see that in China it's more than 60% of people's wealth is sitting in buildings. And when you look on the right hand side, this was one of the reasons which pushed actually or created this real estate bubble, because what I understood is that Chinese people, they love to invest into buildings, and they started to buy one condo and then a second one and a third one, but at a certain time they would not find buyers, and that was a real issue actually for them. And you see actually from 2004, you see that the proportion of Chinese households allocating their money or their assets into buildings is actually going down. But just be attentive on the right hand side, the graph starts at 50%. So again, we are speaking of a rough cut. 2/3 of asset allocation of households is still sitting today in real estate, so in buildings in China. And compare it just, for example, with the US, but you have the other stats here like Japan, UK, and Germany. You see that there's just a mindset difference. So, I mean, I don't like people who criticize China because of the real estate bubble, but there is a cultural aspect that people like in China to invest into buildings, and they like to invest less into, for example, stock markets or equities, as I tend to do, for example. So this is, I think, important to understand behind. What is also important to understand behind, and here I'm reusing a slide that I actually was showing in the October 2021 YouTube video, and it was also part of one of our monthly webinars, is that at a certain point in time, so in August 2020, the Chinese government actually decided to, I'll call it, draw a certain line, because given the fact that Chinese people like and love to invest into property, plant, and equipment, so typically buildings and this type of assets, well, at a certain point in time, the amount of debt that those people were actually raising was actually becoming just too high. So at a certain point in time, what happened, and this had an impact on Evergrande as well, is that because they pre-financed those constructions of those large suburbs, they actually at a certain point in time, so the Chinese government said, listen, I mean, we see that there is just too much speculation, the market is too hot. What we're going to do is we're going to actually define 3 attributes, 3 red lines. If you cross them, you will no longer be able to raise fresh debt actually to fund new construction projects. So this is what you see on the right hand side. So the three lines was actually, and I will make it simple here, liability to asset ratio, net gearing ratio of less than 100%, and the cash to short-term debt ratio of more than 1 time. So if those 3 metrics would not be met, it meant that actually the Chinese government was obliging the banks then no longer to lend money to those real estate companies, in fact, including Evergrande amongst others. So, and I felt that it was very strong as message, and I think that and again, I'm not going to politics here, but I think that the Chinese government was right before avoiding to leave the bubble just become bigger and bigger and bigger. I'm not saying that it was too soon or it was too late. I mean, what happened with Evergrande was a little bit late, let's be very fair about it, but I think that the government was very courageous to draw those 3 red lines, and at a certain time, if those 3 red lines were breached, you could actually, as a real estate builder, you could no longer raise fresh money through debt instruments, and I think that was a sound decision from the Chinese government. So we're speaking, coming back here, so I just wanted to give a couple of keys about overall economy, that you have a sense of how Chinese economy looks like. Let's go now into the banking system. So the banking system. So rough cut, that's something that a lot of people do not know. So very probably a lot of people know the big 4 banks like the ICBC, the China Construction Bank, the Bank of China, and the Agricultural Bank of China. But you have other big national banks. I remember, for example, I do know the China Merchant Bank, for example, and the Ping An Bank as well. And then you have also those big internet banks like WeBank, for example. That's one that was that resonates to me. But you have more than that. And then you have, of course, policy and development banks, like those are the 4 big ones. And so including the People's Bank of China, which is basically the Chinese central bank. And then there is what I call a long tail. And actually, and I mean, even myself, I didn't know that there was such a huge long tail of banks. There are, and I'm going to show you where this figure is coming from. They had in, I think it was end 2021, fourth quarter of 2021, they had 4,400 financial institutions throughout China, which includes regional and local banks. And this is what I'm going to show you in the upcoming slides. So first things first, and I want to put something into perspective because I saw this in a LinkedIn article where a person was saying that the amount of assets that were held by Chinese banks was 3 times the GDP. So we'll come to that in a second. What is interesting nonetheless to understand, if you compare the national GDPs of US and China, let's leave all the rest of the countries aside. I mean, from a global GDP perspective, it's US and China who are clearly number 1 and number 2 for the time being. So if you look at the top 4 banks in the US, so the 4 top banks in the US, and you see here, this is a statistic that I got from SAP Global. You have the URL below here. So they represent rough cut 11.2 trillion in assets, which is rough cut, let's say like 40% actually of the global, of the US GDP, in fact. When you look at China, already here, something that has been striking me is that if you take the top 4 Chinese banks, they hold actually more assets on their balance sheet than the Chinese GDP. So they hold actually, according to this latest statistic from SAP, they were holding 21.9 trillion US dollars in assets on their balance sheet versus a GDP of China of 19.4. That was already, first of all, interesting. The second thing is, so this is just the top 4 banks. What about the total financial sector in China? Because again, when already the top 4 banks are holding more than the Chinese GDP, and I know the statistic, having researched the statistic, that they are around 4,389 according to the Q4 2021 statistic, financial institutions in China. Well, actually, the total amount of money that those institutions were holding in their balance sheets was 51.53 trillion US dollars. So that's 2.5 times, rough cut a little bit more, 265 times the GDP of China. And so one of the things, and again here, because again, coming back to what I saw in a LinkedIn article about, I'll call it this bank crisis that is going on since 2 weeks in China. One thing that when you just throw in such a statistic, some people are like, oh, wow, this is too big, etc. I'm always saying, hold on a second. What we need to understand is the assets that are held by the Chinese banks, how much of those assets are domestic, so inland assets, and how much of those assets are foreign assets. Because, I mean, most of you know that, for example, China owns a big part of the US debt, amongst others, and I think also Japan is part of that. I have not now looked up the latest statistics about who is holding the biggest portions of the US debt. So I think it would be unfair, and again, I'm trying always to bring facts on the table. It would be unfair to not analyze when we speak about this figure, 51.53 trillion assets in the balance sheets of those 4,400 financial institutions in China, which is 2.5 times, a little bit more than 2.5 times the GDP of China, of not trying to analyze, but wait a second, from those assets, when we speak about risk management, how much of those assets are domestic assets and how much of those assets are foreign assets? Well, actually, here, this is, in my opinion, the correct statistic. So you have actually, from those 51.53 trillion, which is the total amount of assets that the banks, those 4,400 banks have in their balance sheet for China, representing the financial sector in China, 15 trillion are actually held in overseas assets. Those are assets that are not domestic. That's a rough cut, a third, meaning that yes, it's true, it's like 70% or 71% of the assets in those balance sheets are inland assets. So when you look at the other 15 trillion, how is it splitted? Well, actually you have 7.4 trillion which are sitting, so rough cut is half. So it's rough cut 7.5 trillion that is sitting in other banking assets, and it's actually 7.6 trillion that is sitting in non-banking assets overseas. And you see here, I've put you the URL if you're interested. You see the differences between deposits and loans, bonds, and other type of assets, including financial derivatives. So just to share with you, I think it's important when we try to put facts on the table, is that we really try to analyze things, and not just, as I saw in a LinkedIn article, that somebody throws in a comment, yeah, but the Chinese banks have 3 times the GDP in their balance sheet. Yes, but it would be unfair then not to say how much of that is overseas assets and how much of that is domestic assets. And this is what I'm trying to show you here, just to give you a sense of what is the amount that is in the assets that is linked to inland assets. So here it would mean that basically there are rough cut 36.5 trillion assets in the balance sheets of the Chinese banks, in fact, which is still above the Chinese GDP. So one of the things when we look at and here, I mean, if there is a financial bank crisis going on, of course, typically, I mean, after the last financial crisis of 2008, you typically have now some type of financial stability reports or stress tests, for those who know, who are stress tests that are actually being done by, if it is by Europe, by the US, and China is doing this as well. And here I must say I was a little bit disappointed, because the latest available China Financial Stability Report, I've put you here again the URLs. Again, I'm trying to put facts on the table. The latest stress tests have been published in May 2023, and they are, so is when they published the 2022 Financial Stability Report. And actually you're going to see the figures that we have on the stress test are from Q4 2021, if I'm not mistaken. So that's already a little bit, let's say, outdated. This is like 3 years ago. And since they have not published a new financial stability report, for whatever reasons, I'm just putting facts here on the table. So when you look here, so again, I've put you here the URL. When you go on the People's Bank of China, so the PBOC, that's the Chinese central bank, you go on their website, you look at the financial stability reports, and you see, in fact, that they are providing the results of the central bank rating of financial institutions. And the latest one that is available is from Q4 2021, and they published this in early 2022. Since then, we don't have any results of stress tests for the Chinese financial sector. In that report, the PBOC, so the Chinese National Bank, let's call it like this, they were reporting that China had a financial sector with 4,398 banking institutions, with a rough cut 24 large-size institutions, and 3,997 small and medium-size, and 377 that are non-banking institutions, which, for example, include loans for cars, for example. And here you see the detail, how is this split split done on those 4,398. So you see actually, so the development and policy banks, state-owned commercial banks, the city commercial banks, the rural commercial banks, etc., etc. You have village and township banks, and then you have the non-banking institutions where you have, like, for example, auto finance companies. And so what is interesting in the stress test is to see how the Chinese, well, I wanted to say government, or how the Chinese central bank is providing the rating results from 1 to D. So it's the lower the level, the lower the risk, in fact. So it's interesting to see that, for example, in the development and policy banks, the state-owned commercial banks, the joint stock banks, there, in fact, the levels or the scoring, the ratings go between 1 and 7, which what the Chinese government, so the PBOC, says that falls within the safe boundaries. And then you have in city commercial banks and rural commercial banks, there, in fact, you see that there are some high-risk institutions. Even the Chinese government is mentioning this in the Q4 2021 report. So they are saying that, yes, they do have banks that are ranked, so some are ranked level 2, level 3, etc., but there are some banks that are ranked level 8 to D. I don't know what D stands for. Maybe it's default or close to default, but clearly when it is above 8, that's high risk institutions, in fact, and they are mentioning it, so they are somehow transparent about this. What they share in the report as well is this graph, which I find very interesting. So this is a graph in the report of the PBOC, where you see actually the amount of financial institutions. The granularity is not clearly mentioned in the report, but they just aggregate the graph, and you see here the amount of banks that are considered level 1, level 2, level 3, level 4, level 5. So that is like safe boundary. Level 6, level 7, that starts already, so the amount of risk is increasing. And then you see clearly there are 91 level 8 financial institutions, 157 level 9 institutions, 64 level 10 institutions, and 4 level D, which I consider probably D being like close to default, in my opinion. And so we don't have the details. And of course, what we are missing now to better understand what is happening in China now, we don't have an updated statistic. We don't have an updated stress test. There are maybe reasons for that. Maybe the government wants to avoid also panic on the markets. But I mean, you don't have smoke if there is no fire somewhere. But I do not know what is the extent of the fire. And I will come back to that when I will say that apparently, and again, we always need to be careful with rumors, because sometimes you have countries who throw in propaganda stuff just to destabilize markets, etc. So again, I will not go into the geopolitical conversation, but there is information in the press that apparently, I think it was the second week of July, 40 banks, smaller banks, had been absorbed by bigger banks, and there were indeed some bankruptcies happening as well with, let's say, other type of trust funds. So the latest news, coming back to this. So you saw already this slide. So indeed, this company, Zhongji Enterprise Group, that was kind of considered like a shadow bank, has filed for bankruptcy, and the Jiangxi Bank of China goes under. But okay, let's come back to Jiangxi. If I go back to the slide here, Jiangxi actually is not part of the big national bank. So it's part of this long tail where you have thousands of smaller regional, even township banks. Okay. So, and then indeed, so this is the LinkedIn article. I think it was a very interesting LinkedIn article that the person was writing. And it was in this article that a person commented, yeah, but the amount of assets is 3 times the GDP. Okay, so be a little bit more precise about the assets that are overseas assets versus inland or domestic assets. So July 2024, we are early 2024. So indeed, within a week, apparently 40 banks disappeared. But let's be fair as well. That's less than 1% of the amount of total banks. Remember that we are speaking about 4,389 financial institutions in China. So rough cut, a little bit more than 4,000 financial institutions and around 377 non-financial institutions. So I'm just trying to put things into perspective here. Okay. So in terms of conclusion, and I hope that I was able to give you some kind of quick read about the Chinese economy and about the Chinese financial sector. Again, I'm stating again what I said already in the previous video in October 2021. I think that the Chinese government was courageous and took the right action to impose those three red lines, to avoid the bubble growing in a way that would really have a systemic consequence if the bubble would burst. So, and since 2020, since 2021, okay, there has been, Evergrande has been in trouble, but there was no big financial crisis because of this. And I think we need to let's say consider that the government took the right decision, in my opinion, to already impose end of 2020 some very strict rules on raising fresh money through debt, in fact. We can agree, and I'm saying this again very in a neutral way. I'd love to see the latest stress test, and not just having a latest stress test from Q4 2021. I think that's, in my fair opinion, a little bit outdated compared to, I think, the latest European stress test of 2023. I think there indeed a little bit more transparency would be needed. I have the feeling for the time being that but was in the news, and you know how Mr. Market reacts sometimes. I felt that was like a little bit a overreaction, and you know that sometimes people they look at some problems and say, oh, now this is the moment. Again, I'm not a person who forecasts things. I'm just trying to put facts on the table. But nonetheless, I have the feeling when I just look back that at least it's clear that for the time being it's very silent since 10 days, rough cuts. There are no further things in the news. Whatever the reason, is there any kind of embargo on information coming out of China? I do not know. The fact is that it is silent, pretty silent since 10 days. And again, we need to be fair. It's not the first time that these real estate related problems, so debt related issues, actually come back into the news, and you see if it is people unresting, or you hear about real estate companies being in trouble, etc. So we will see what will happen in the future, but at least I wanted to give you a quick, it's true, I hope with the URLs that I'm sharing with you that you may be able to dig deeper if you're interested in this subject, but I wanted to give you these keys to read a little bit what is going on in China related to the financial sector in China. With that, thanks for your attention. Hope this was useful, and talk to you in the next one. Thank you.